Hi, fellow traders. What's happening? As promised, I'm doing the next segment in building consistency in your trading. Today, we're going to be talking about price action, the second part of it. But I do need to qualify something real quick when it comes to being consistent. If you're consistent in your process every day in the market, you're going to be profitable. If you're inconsistent, you're not. Yeah, you're going to make money here and there. You're going to hit it and make a winning trade every now and then. But you're not going to be consistently profitable over a period of time. And that's how you make money in trading. Okay, anybody can have a good day trading. My cat can have a good day trading. Although the kittens haven't. Lucky's had a good day or two trading. But the point I'm trying to make is it really doesn't take any skill or any knowledge or anything to make a winning trade. But in order to consistently make winning trades, make trades that make money versus trades that lose money, you have to be consistent in your execution. And you've seen me over the last 8 years, I've traded the same strategy, the same strategies. The only one that I don't trade a whole lot of, and I should have traded it today, is the reversal strategy. That's starting to wake back up. But like anything else, market conditions dictate how you execute that strategy or whether you even trade it. It's all about market conditions and price action. But you've seen me, those of you that has followed me or known me for the last 8 years, even back when I was at Warrior Trading, using the same strategies. I've eliminated a couple of key indicators because I realized back then that indicators are not forward thinking. They're actually data that's already happened. And it's very difficult to use it to predict what's going to happen in the future. However, it does predict where people are going to be, because those indicators are ways computer generated programs can read the market. I don't know, I'm not a wizard in computer programming, but I know basically that's what they do. Now, some may be able to program it to read price action and make decisions based on that. I would think that's possible, but it would be very, very expensive. But that's why I've always said that we have an edge in the market, because we can adjust and adapt immediately to the price action. But it's basically being consistent with your core strategies and executing your process every day in the market. Being consistent with how you prepare. Being consistent with how you end the day. All of this stuff really, really matters. And as we get through this, we're going to talk more about it. But I just wanted to qualify this state, that in order to make profit, being consistent with your process is that your process has to be profitable. If it's not profitable, let's say you learn something from somebody in one video and they show you, hey, this trade or maybe 2 trades that's worked and that's made a really nice trade, and they show you the basics of it, and you go and you try it. You trade 5, let's say you trade 10 times, and 7 to 8 times it didn't make any money. It only worked twice. And then you traded it another 10, and let's say it worked 3 times this time. So out of 20 trades, 15 trades didn't work. And then you do another 20 and you kind of get the same results. At that point, it's it's more than likely the strategy, or you're not executing correctly. Or you're not executing the strategy correctly or applying the strategy correctly in the market. But because you've been consistent in how you approach it, you know what doesn't work, and you're able to kind of tweak it from there. But I wanted to qualify that before I got deeper into this, because you have to be consistent with strategies that work, and you have to know how to apply these strategies in different market conditions, knowing when to sit on your hands and when not to. So let's jump into this. This is the pyramid. We talked about the foundation already. If you haven't seen these videos yet, go back. You really need to understand why it's important to build your foundation, why it's important to frame up, why your framework is important. And now we're building out our trading. And we're starting with reading price action, because that is key. And the first one I did a couple weeks ago. We're going to review a little bit of that really quick before we get going. But this is where we are now. We're building out our trading. And you think of this as a house. The foundation is in the ground. You dig it out. You build that foundation. You got to make it strong, because if it doesn't, the house is going to come crumbling down. The framework has to be solid. It holds the roof up. If the framework is screwed up, the roof is coming down. Therefore, the house is coming down. So that has to be solid. And now we've got the framework. Now we're putting up the drywall. We're starting to put all the parts and pieces together in the house so that we can have a functioning house. And that's basically what we're doing here. So we're going to review real quick, talk about price action trading. That's the type trading that I do. And we're going to look at some examples from last week. And we're going to start today with today's trade. We're going to recap today's trade, and then we're going to look at some trades from last week. All right, so we talked about what price action was. And price action is the movement of a stock's price plotted over time. All right, price action forms the basis for all technical analysis. The moving averages and all the indicators that you see is based on prior price action. It is plotting the prior price action. All right, so it is, all of that is backwards looking, but it's technical analysis that's based off of the price action. And price action trading is what I do as a method of day trading, where I make decisions about trades based on price movement rather than on indicators derived from that technical analysis. I do use indicators. There are training wheels. I'm telling you that right now. My mentors laugh at me for still using moving averages and stuff, but they serve a purpose. But I don't base my trades off of that. I use that to tell me, okay, I need to be paying close attention to price action when we're getting to this level. And I use it so that I can have predetermined profit targets, which new and intermediate traders have to have. I just haven't gotten away from it yet. I mean, to be honest with you, I like it. I'm comfortable, and it works for me. So you're going to see my trading is kind of a hybrid of that. And we talked about the basic candlesticks formations. Like I said, if you don't understand what each candlestick means, go back and watch the video, the last video I did. And I talk about each candle and what it's telling me. And as we go through the examples, I'll talk about the candle that I'm looking at to make the decision and what it's telling me. And here yesterday, if you remember yesterday, I talked about a cheat sheet. I talked about you can't cheat this, and some people have these cheat sheets with all of these different patterns on it. Now tell me how efficient you can be as a trader looking at this sheet and looking at the chart, looking at this sheet, looking at the chart, trying to match this up to what you see on the chart so that you can make a trading decision. There's no way in hell I could do it. I don't know who can do it with all that confusion, because most of the setups are not going to look as pretty. We see this hammer, we know this is going to be a potential bottom. Okay? And if it's inverted in the top, we know this is a potential resistance point up here. But why would I go back and try to look and identify this as a shooting star when I know what this candle means? And all I need to do is look at the subsequent candles to determine what trade I need to make on this. It's just that simple when you're reading price action. So I'm not saying people that use these are wrong. I'm just talking about for me and the type trading that I do, because I have dyslexia, I have dyscalculia, and I'm still able to be proficient in the market just reading specific candlesticks. It's a simpler way to trade with extraordinary results. That's the bottom line. And again, I'm never asking you to believe what I tell you. You have the option of seeing it happen every day, seeing me trade every day, and watching it live and in color. And if you ever hear me talk about a damn hanging man or a shooting star or a damn bearish engulfing or bullish you'll never hear me say that stuff, because I'm looking at something totally more simple and straightforward. So, and we talked about how some people use price action in their trading. These are some more common candlestick patterns, and these are easy. And you'll hear me talk about triangles. You'll see me draw a triangle to kind of show you what the price action is doing, how it's getting tighter as it comes to the point of that triangle. And eventually you'll be able to see these things without even drawing them. And that's key. You'll see the price action getting closer together. I'll identify flags for you that tell you, okay, look, this thing is a flag. This is a bearish setup coming. So unless the price action and the technicals tell us that this thing is breaking, you give it a chance. Same thing with pennants. Now, my main thing, you'll hear me say channels every day, 1,000 times a day, because I use channels. I use the price action inside those channels to help me determine my trading situation. We'll talk about that too. You see me draw it and identify it every day in chat, every day in the live webinar. That's why I do it the way I do it, so you guys can actually see it and come up. Okay, here's another cheat sheet. All right, that people will sit there and look at and try to fit their chart into this. Again, don't do it. Learn how to read the candlesticks, and this will come so clear to you without even trying to draw these things and figure out. This is another cheat sheet. Now, when you're learning and you're trying to learn what the pattern looks like, this is great. But don't think the chart's gonna look perfect like this. is not perfect. It is a very imperfect market. And price action is very imperfect in how it puts together patterns. Okay, so that's why I'm always on top of this stuff. All right, so one thing I want to tell you, you guys that are in chat, that you're members, I finally, like I said, I got I'm about to say I got a mentor. I've got a intern that's helping me put this stuff together. And remember, I was telling you I was going to record the morning session. So what I'm going to do, and he gave me this idea and he set it up for me today. Basic is you go to the website. All right. The member videos are here, but I'm putting these separate so that they're not in showcases, because I'm going to update this every day. All right. Now, I don't know if I have enough storage to have every day, like have the whole week, so that if you want to watch on the weekends, you could do the whole week. I'm looking into that. But for right now, in the near future, what you're going to do is go here to more, go to morning session recording, click on my ugly face, and you're going to have the morning session here. All right, you're going to have to use your password to get in it, but you're going to have the morning session here. All right, so we broke it down. The pre-market prep, this is when we're building a watch list. And you know we have dead time between 9 and 10. That's when we're going to go to, I'm going to stop, and then we'll start back recording the live morning trading session. We start that, and all you do is click on me wrestling this bull like I do every day, and that's going to take you to the morning session. And this is the morning session from today. All right, I didn't separate it yet today. I kind of forgot this morning. But tomorrow there will be 2 separate videos on this. Now also, I will be doing live aftermarket earnings trading. I will be recording those in the very near future. So everything is going to be right here. The live trading is going to be right here. It's a separate page on the website. Once you know where it is, you'll always get it, or you can bookmark it. And when I'm doing the recaps, if you want to go back and watch the live feed, you can do that. All right. And I'm talking about price action in the trades. So price action trading, like I said, some of us traders, we make decisions based on the price movement of a stock. Most professional traders that day trade do this. We're simply following the movement of price and trading at the point that we think has the best profit potential. Now, most price action traders don't use technical indicators such as moving averages or Bollinger Bands, but things like that. But I incorporate indicators simply as a point of reference. They're training wheels for me. And I'm going to keep riding with training wheels. I don't give a damn who laughs at me. They help me in making decisions. And, for me, it's hard for me to sit there and watch the candlesticks. It's hard for me to sit there and watch that without emotion coming in at some point. So I need to kind of take my eyes off and just have indicators on the chart where I can just come back and kind of assess it when it gets there. Because basically the indicator is telling me that, hey, this could be a potential point of support or resistance. It could it's a good place to take profit, or this is where your trade can turn around and go against you. You need to pay attention to what the price action is telling you. And it's as simple as that. All right, so price action trader believes that the only trustworthy source of information comes from the price itself and its movements. Yes, not from anybody telling me this or that. I'm looking at the stock trading itself. That's all that matters. If a stock price begins climbing, it shows that traders are buying because prices rise as traders buy. Then they assess the price action based on the aggressiveness of the buying or selling, depending on which way we're trading. The historical charts and real-time price information, such as what you see on level 1 and level 2, and volume, and the velocity is basically how fast the stock is moving. It's not 100% the volatility, because the volatility is jumping around, but the velocity is a little bit, it is part of that. And you add the magnitude to it, then you've got the you've got how irrational or erratic the stock is going to be moving. All right, so hopefully that makes sense. I tried to put it as simple as possible. But again, learning it firsthand, watching it live is the best way to do it. Okay, that's the number one way to learn price action. So let's get into today. Then we're going to look at some examples here. But I want to preface today before I get into my the recap of the day and how price action played a role in that trade, and then some other trades from last week. So the SPY, we were looking at this last night. We talked about it. It made a strong move up into resistance. Now, if this resistance wasn't here, I would have been all over saying this thing is going to go up. Okay, I would have been all over that. But like we said, it's running into resistance. It could gap down and sell off, or it could gap down a little bit and push through on up, just like in trade, just like it did yesterday. Because, let me bring up this closer, because this, based on how we know to read price action, how to read this candlestick, we know this is a very strong candle. We know that the support down here got ate up. And it just got bought up, not ate up. It ate up the resistance, and it just bought this thing back up. And it ran into, the top of this ascending resistance. Today, we opened below the 5-day, which is bearish. We opened below the 5-day. Yesterday, we opened on the 5-day. It wasn't below. We sold below at the open, and then we got bought back above it. Today, we opened below it. We tried to push up a little bit, and then eventually we sold off to the 20. We got on the 20, and we got bought back up, and we saw it grind up today. It's still below the opening range low. It's still below the 5-minute opening range low, which tells me this is still really bearish. Okay? That's what it's telling me. Now, that doesn't mean tomorrow we can't open with a gap up over the 5-day and push up. I'm just telling you what this is telling me now. How I trade tomorrow is going to be based on what the market is telling me tomorrow, not what it's telling me right now. So everything for me is about what the market is going to tell me tomorrow. That's the thing. So I hope that makes sense. Sorry, I need to cut this phone off for a second. All right, so tomorrow, it's I can't say that my bias is to the short side, because look at how we got bought off the 20-day. All right, and I can't say it's to the long side because we're still below the 5-day moving average, and we did not take out the 5-minute opening range low. So to me it's a 50-50 shot. You know what I'm saying? 50-50 shot. So what happens tomorrow is going to be really, really important. Really, really important. All right. So today, we traded RBLX. Now, RBLX tried to blow me up on earnings yesterday. I got in. The bottom fell out. But thank God it bounced, and I was able to get out with minimum pain. And that was really, really, intense. I was trying to do it on my phone because I didn't realize it was gonna do that. But today I'm playing the price action. Okay, that's all I'm doing. Look at how it bounced, it recovered. Here's a 5-minute opening range high. Here's a 5-minute opening range low. It took out the pre-market high. So I'm gonna get in. It starts to work, and then here it starts to battle. Okay, it pulls back, it starts to battle. This is a red candle. But look at the wick down here. So it is chopping around. It is volatile. But I'm looking at the price action. Look at the wick. It came down, hit VWAP, and got bought back up to the 100. Here we go again. Wick down again, got bought back up, settled on the 100. So here's the next candle. This one was really, really wicked. It sold off, dipped down, but if you are watching the price action, if you are watching the bid and the ask, and let me see. I'm gonna bring up the. Let me bring up the. Yeah, there we go. If you're watching the bid and the ask on this, you would see as this was going down, you would have seen that. Where am I? Right here. Okay, you would have seen that the bid and the ask started separating. All right, the ask stopped following the bid down. The bid started selling off. Okay, the bid started selling off. The ask on this side stopped. It stopped moving altogether. That told me that there is support there. So I did have a stop in place. My stop at that time was at the low of this. Was it a mega stop? Yeah. But we're reading price action. And that was the whole lesson, is trying to read the price action and trusting these technical levels. And this is where the I guess inexperienced traders are going to be at, and all of the algos, that their programs are based on these moving averages. So we know this, and I was able to see, watching the price action, and basically I don't even need level 2. I can just use level 1. It doesn't matter. All I need to see is the spread and what it starts to do when it hits a certain level. And that tells me what's happening. And so that alone is what kept me in this trade and gave me the confidence to be patient and let this work itself out. Now, sometimes I bail out on this when I don't like what I see. And it's all about reading the price action. And so we were able to get a really, really nice trade on this. And it did run up after I hit my final target. You know, it did push up some more. And it hit the top of this linear regression channel. I had no idea it would get that far. But I'd already made my decision as to where I wanted to take profit. Had I been 100% reading price action, I wouldn't have taken profit here. I would have just let it run. I probably would have taken it right in here. But, you know, this is why I say I do a hybrid model. Because sometimes if a trade takes so long, it really, you know, works my patience. And I may make a dumbass decision. So sometimes I have to use and put those targets out there and just take my eyes off of it for a minute. You know, and that's what keeps me sane and focused and doing the things I need to do. All right, so that was RBLX from today. And oh yeah, we made 482.85. I didn't mean to put that in here. But here is coin. This is a trade from earlier in the week. Same thing right here. The same thing. Look at, we've got it kept dipping down, and we knew that there was some killer support there. Then it started to bounce. We ran into some killer resistance here. All what we were seeing in the price action. Now here's, if you were looking at the trend, in order for this downward trend to break, this would have to take out this high. And when it pulls back, it has to put in a higher low and another higher high. And you could say this trend is breaking. We're still in a downtrend, even though we get a bounce here. We're still in a downtrend. So trusting the price action that we read, we stay in the trade and we let it go. It's still choppy. It's a chopped up mess. And I can't sit there and watch it. I can't. So I've got to have a target in place. And so we got profit here. We got profit here just through this level. And then, you know, we profit stop on the way back up. And that was that. So 100% reading price action. What we're doing is we're watching what's happening with the candlestick formation, and we're watching what's happening with level 2 or level 1, either one, doesn't matter. We're watching what's happening to the spread when it hits a certain level. Okay, that's why when you hear me say there's hella resistance here, there's a lot of support, look at how the spread is widening. You know, look at the ask. It's stuck. It's not going anywhere. The bid is trying to dip. Sometimes you get a stock that's been trading with a 5-cent spread. All of a sudden the spread is 40 and 50 cents. That's why you see that. And that tells you that's what you have to watch. And you'll be able to see it in how the candlesticks are trading, how they're forming. And we make decisions based on that. All right, that's coin. Here's Airbnb. This is an aftermarket earnings trade. Okay, we waited for the first candle on earnings announcement to print, and we get in once it cracks that level. Here it started to fight back, but look at the price action here. Look at the price action. Okay, this candle right here, if it got confirmed, if this candle, which is a pretty bullish candle, because it tested down here and it actually closed close to the highs, if this candle had confirmed this, I would take it off, depending on where the 9 is, because it could be some buyers or sellers sitting here at the 9, or people waiting for this to bounce and they start selling at the 9 and it comes back in, kind of like you see right here. But it's all based on reading the price action, reading the candlesticks. This never got confirmed, so I still have confidence in this trade. Comes down, it bounces again, never really confirms. We test the 9 here. The 9 is right here, so this is, I'm going to defer to this to see if there are any sellers here. And that's what I use is for points of reference. I know that we're going to have buyers and sellers here, albeit whether it be algos or retail traders that use moving averages, whatever. And we got the first target, and it just kind of went sideways from there and ended up killing it later in the day. Later in pre-market, right before it closed. But again, reading price action. All right, here is Airbnb from last week. Last week. I get in, once we broken over this resistance. A lot of times you're going to get pullback because you're going to have people selling. The levels that you get in, they're probably going to be people selling. So you have to be ready for it to pull back. So here we go again. It comes back, it tests. Look at these wicked candles. There's no direction here. So it's actually kind of forming a pennant. Don't you see it? You draw a line here, you draw a line there. It's kind of forming a pennant. A bullish pattern. But I'm not even looking at that. I'm looking at the candlestick formations. And the sucker broke out. I gave it time to work itself out. Trusted the technicals, trusted the price action I was seeing, and we nailed it. And here is where it came back. And we had a huge pullback on this candle. I was hoping it would hold up, but it didn't. We pulled all the way back. But still, solid trade using price action. Here again, reading the price action, allowing it to get to our target. And then it just traded sideways from here. But this was right at the close. So of course it's going to do that for the most part. And last but not least, SQ. Here we bought it here. I actually missed my exit up here. I was kind of pissed at myself. But we pulled back right to support. Here's a moving average. This is supporting it. Okay. And the price action was such that it was confirming that we're getting support here. It's not the 9 that I'm trading off of. I'm reading the price action and it's saying, hey, we got some support here at this level. And so I held on to it. And again, nailed some profit here. Now, we got 2 hits and then finally pulled back and ended up taking it off. But reading the price action, it can keep you in trades. It can get you out of trades when there's, the price action is telling you it's just not working. You just have to trust it. You have to be in sync, in connection with it. You know, if you're tired, you're frustrated, you're going to start seeing things that aren't there. And if I haven't proved that to you in the last couple of years, I don't know what the hell I've done. But that's it. Guys, like I said, if you want to learn this stuff, you can't watch a video and get it. You have to watch the market and understand. And through every scenario, just take mental notes of what you see and what's happening. Because the decisions that you make, you're not going to be able to go to a piece of paper. I mean, it helps you in the beginning when you're learning. I had not cheat sheets, but I wrote down my trade plan. You know, this was my trade plan. And I wrote it down so that if I got lost in the trade, I can come back and read it. It wasn't anybody else's trade plan. I didn't write down what anybody else in the room was saying. It was my trade plan. So I didn't use a cheat sheet by, you know, getting somebody else's stuff. This was mine. And so for you, you know, if you got to take notes, you write your notes. And it needs to be based on what you are doing. So I hope this helps. If you have any questions, email me, ed@AverageJoeTrader.com. I'll be happy to get back with you and help you navigate these rough waters here. So you guys have a great night, a great evening, and I will catch you tomorrow.